Good afternoon. We'd like to welcome you to this presentation. My name is Ward Keever. I am the founder, president of Covenant Wealth Strategies. Some of you may recognize the name Ward Keever. My father was actually the CIO, Chief Information Officer, for the Medical Center of Delaware back in the day, now Christiana Care. We'd like to welcome you September 17, 2020 to this presentation, this Zoom webinar, specifically for eligible employees at Christiana Care regarding the Voluntary Early Retirement Program, or VERP package that has been offered. I'd like to point out that unlike many or perhaps most firms in our industry, Covenant Wealth Strategies is uniquely positioned to help our clients. We have no proprietary vendors or products, and we offer completely independent, fee-based financial planning and investment advice. Presenting today will be our very own Bill Lloyd. Bill is a graduate of Penn State Nittany Lions and is a D1 athlete playing lacrosse for Penn State. In his spare time, Bill enjoys still playing and coaching lacrosse, as well as spending time with his wonderful wife, Katie, and their two children, Mason and Avery. His favorite place to be when he's not at the office is at the beach with his family, making great memories. And we're delighted to have Bill with us. Bill, I'll turn it over to you.
Thank you, Ward, and thank you everybody for being on the call today, and I welcome the opportunity to speak with you afterwards as well. So as a firm, and Ward didn't really get into this much, but we do believe that all financial decisions are best made when it's in the context of a comprehensive financial plan. So when we begin relationships with our clients, we first place the financial puzzle pieces out onto a table and begin by flipping over all of those pieces, start with the corners and the edges of the puzzle, and then methodically start to fill the gaps and put that puzzle together. And part of a financial plan is helping our clients make big, important life decisions, which typically have big financial implications or ramifications. So why are we hosting, or first and foremost, if you have any questions that you'd like to send over to us today, you can do so by sending them to michelle@covenantwealthstrategies.com, and we will absolutely get back to you and address your questions. So why are we hosting this call, and what happened? What sparked us to host this today? So Christiana Care has offered early retirement packages to many employees age 60 plus. We have several clients that have been directly impacted by this, and we've familiarized ourselves with this package being offered and wanted to provide a forum for you and or your colleagues that may be affected. So this is a big decision, and frankly, it's an irrevocable decision that you're going to have to make, and we want to make sure that we do everything in our power to help you make an informed one and help our clients make an informed decision, because you only get one chance. Typically, when companies roll out these VERPs, or voluntary early retirement packages, it typically goes in waves, depending on how many people take the first package or opt to take the first package. So, for example, employees age 55 plus may start to receive some type of package after this first wave, depending on how many people take the first one. The reason that they're doing this in the first place, we'll get to. But besides your employment status with Christiana Care, the VERP also will affect your pension and health benefits. These things will trigger other financial planning considerations and important decisions to make. So we're going to go over some frequently asked questions, and we'll get to the root of all this. Why, in the first place, is Christiana Care offering this early retirement package? So the organization, like many organizations across the United States and across the world, frankly, have been significantly impacted by COVID-19, and that's created a significant budget gap for Christiana Care. Largely, this was due to increased expenses of providing care, and also the closing of services, mainly things like elective surgeries, which weren't taking place for a number of months. So that's a little bit about why they're taking it. Are you required to take this package? The short answer is no, but what happens if you don't? So we always talk to our clients about a good first step to take if you are offered a package, would just to simply have a conversation with your manager and supervisor. Explain that as they may know, you've been offered an early retirement package, ask what their thoughts are, and hopefully that person will be upfront and honest with you about the situation and be able to have your best interest in mind to help guide you to make a good decision. Another question, I've been saving money in my Christiana Care 403B plan through Lincoln. What happens to that money? Well, good news, similar to your pension, as we will discuss, you do have options. So we can help you make an informed decision about what to do with the money in your retirement plan, as you do have several options to do so. But one thing I do want to touch on today is the fact that there are things you can do before your retirement date to make sure that you're taking full advantage of the 403B plan. For instance, if you are maxing out and deferring as much money as possible into the plan, if you take an early retirement package, your year is going to be cut short. So you could possibly contribute more in your final few paychecks so that you can max out and take advantage of all the great things that 403B plans have to offer, such as tax deferral. Next question, how does this affect my pension and what are my options? So there's a lot to get into here. For time's sake, we'll go through a few things. Christiana Care, first and foremost, is offering to grant an additional 5 years of credited service to pension benefits. For example, that means if you're 60 years old, they're offering you pension options as if you're a 65-year-old. So bottom line, that means that they're offering you more money than what you'd be entitled to currently. Some pension options. If you're legally married, you'll be defaulted to a qualified joint and survivor annuity form of payment unless your spouse signs a form electing to waive the spousal benefit. So that means that that you'd receive monthly payments for the rest of your life. If you were to pass away and your spouse is still living, your spouse would receive at least 50% of the amount that you were receiving until they pass. At that point, the benefit would cease. There would no longer be any more payments. Okay? If your spouse waives the qualified joint survivor annuity, first off, you would need to have the signature notarized. That's one thing that we have learned. So if you do waive the qualified joint survivor annuity, this signature for your spouse will need to be notarized. And then you have several other optional forms of payment. So I'm happy to set up some time to discuss all of them with you in detail. For time's sake, we'll focus on 2 of them. And frankly, the other options are minor tweaks to the second option here. So number 1 is you can take a lump sum payment. So you would be provided with a one-time lump sum payment. Again, using the example of a 60-year-old, your lump sum benefit would be paid as if you had an additional 5 years of service or you're age 65. With a lump sum, you have the option to either roll that money over to a rollover IRA account, which would result in no tax liability, or you can take a lump sum and put that money in your checking, savings, or other investment vehicle, and you would owe income tax on that entire lump sum. So that's an important note. If you did take the lump sum and just put that money in your bank account, you will owe income tax on the entire lump sum. And it is important to note as well that there's a mandatory 20% federal tax withholding and 5% Delaware state tax withholding as well. The lump sum rollover option does provide some additional flexibility if you do roll that money into an IRA and opens the door to other investment vehicles. One of them is annuities to generate guaranteed lifetime income similar to a pension. However, with most annuity products these days, you don't have to give up control of the asset. Now, what does that mean? So unlike a pension, if you're taking income from an annuity, and annuities vary across the board, so all of them have their own bells and whistles, but if you're taking guaranteed lifetime income from an annuity, you pass away, your spouse passes away, the annuity has a death benefit involved as well, assuming that there's still money in the contract. With a traditional pension, you pass away, your spouse passes away. As I mentioned earlier, that benefit then ceases and there's no more payouts. So there's additional flexibility there. You also just have additional access to that money if needed for unexpected emergencies, life events, and also have, again, similar to what I was saying about the annuity, just the ability to leave money to your heirs beyond your spouse. So if you'd like to discuss that in more detail, again, we're happy to set up some time to review your situation to, again, help you make an informed decision. The second one I'll discuss is the single life annuity. So that's another option. Again, your spouse is waiving their right to it, and that's for your lifetime only. You're going to receive a monthly payment. After you pass away, no further payments would be made to any beneficiary. So typically this option provides for the highest monthly payment, but once again, when you pass away, the benefit is gone. So if you're comparing a qualified joint survivor annuity with a single life annuity, the form of payment that actually will pay more when all is said and done really depends on how long you live and whether your spouse lived longer than you and how much longer they live. And that'll determine how much payout total would be more between the qualified joint survivor and the single life annuity. All right, continuing on here. So this is a really big one. So how will this impact my health benefits? And what is COBRA, first of all, and what is the COBRA Bridge program? So if you're currently enrolled in Christiana Care's benefits program, you and your family be able to continue coverage under the COBRA Bridge program until age 65, when you should be Medicare eligible. COBRA is an acronym for the Consolidated Omnibus Budget Reconciliation Act, COBRA, which provides eligible employees and their dependents the option to continue health insurance coverage when an employee loses their job. It's typically only offered for anywhere between 18 to 36 months, depending on the company. But the Bridge program offers to extend that until age 65. So another important question to ask if you're in this scenario, we've had clients that are the Christiana Care employee is older than their spouse who is also on their coverage. So this is important. When they turn 65, their spouse still will not be Medicare eligible. So an important question to ask Christiana Care is if they will provide coverage for the younger spouse until they reach Medicare age. And we've seen firsthand that they are willing to do that in most scenarios. So that's an important question to keep in mind. Another one that's not on the slides here, but if I've already made decisions and submitted the paperwork, is there anything that I can change at this point? And the answer to that is yes, you should be able to. We've learned that you have at least 1 week after the date, which I believe is October 2nd, if I remember that correctly. October 2nd, you have 1 week after that in order to make changes to decisions. So if you're on this call and you've already made decisions and something I said has made you question what you're doing, you have time to make some changes to that so we can talk. Some potential ripple effects to consider. So there's many. We're going to go through a few of them here today. Number one is Social Security. So we can help you review your Social Security and work on cash flow planning with you to help make an informed decision about when to begin collecting Social Security. And this chart on the slide here shows what your full retirement age would be, which is important for the next slide. So every year that you delay taking Social Security beyond your full retirement age, you will receive an 8% increase in your benefit each year. So in this example on the slide, if you are able to delay taking Social Security until age 70, it would result in an increase of your monthly benefit by 32%, which is obviously significant. So again, if you'd like to have conversations about your cash flow planning and your Social Security planning, that is all part of the comprehensive work that our firm does. Next, Medicare planning. So Medicare is a very complicated, very confusing, can be confusing topic, and our firm has resources that can help you with questions and considerations regarding Medicare as well. So, which supplement plans are right for you? Which plans should I file for? When should I do this? When I'm 64, should I be starting to plan for this now? Is it ever too soon? There's a lot of things that you can ask. So we actually hosted a webinar, or a virtual event rather, on Tuesday this week, in which we partnered with a firm called HTA Financial out of Exton, PA. They're a firm that's solely dedicated to helping people navigate the complicated world of Medicare. It's always an extremely popular event. We typically have it in person, but for obvious reasons had to go virtual this year. But if you're interested in obtaining a link to that, please contact us and let us know. We'll get that to you as soon as it's available. Again, they do a great job of making a very complicated topic pretty simple and straightforward. And they also offer one-on-one consultations as well. So another possible implication is taxes and tax planning. So I want to preface this by saying that we are not tax advisors. We are, however, very knowledgeable and informed when it does come to tax planning. So if you no longer have income next year from Christiana Care, what does that mean from a tax standpoint? Will you be in a lower tax bracket? What steps can you take to plan for that? Are you charitably inclined? Are there things that you can be doing from a tax perspective to put yourself in a good situation? So all of that are things that we work with our clients and their tax advisors to help create strategies to effectively manage their tax burden. How is this going to impact your day-to-day life? Am I ready to retire? Retirement, especially when it comes sooner than expected, can drastically change your entire life. What happens when you wake up on a Tuesday and you don't have anything to do? How are you going to occupy your time? What are you going to spend your time doing where you would have been at work? So many people consider their work a large part of their purpose. What's going to be your purpose if you no longer have to get up and go to work every day? I think it's really important to think about these things beforehand and how you're going to handle the emotional side of retirement as well as the financial side. Because as we see quite often as we walk hand in hand with our clients through retirement, people tend to make financial decisions for non-financial reasons. So it's important to just start to think about these things ahead of time and start thinking about the mental aspect of all of this as well as the nitty-gritty and the financial side of things. So on that, again, you can send any questions to michelle@covenantwealthstrategies.com, and we'd be happy to address them online, or we can take it offline and speak to you afterwards. Just want to reiterate that, again, you're faced with a big decision here. It's a decision that hopefully you only make one time. Our firm walks alongside our clients every step of the way to ensure that they're comfortable and confident that they're making the right decisions for them and their families. So if you or anyone you know has questions about any of this and you're interested in having a more in-depth conversation, we would completely welcome the opportunity to serve you. And we would be happy to schedule a no-cost, no-obligation phone call and see where we can serve your needs. So thank you again for your time. Appreciate you listening today. I hope everybody has a great rest of the afternoon, and I'll just turn it over to Ward here to wrap us up.
Great, Bill. Thanks so much for sharing your expertise with us. I think I would just emphasize a few things that you said. First of all, at Covenant Wealth Strategies, we believe that the best decisions are made within the context of a thorough and complete understanding of our clients' current circumstances, as well as their goals and plans for the future. And so the importance of making these decisions not in a vacuum, but with an understanding of how they relate and how they impact many other areas of your life. For example, cash flow planning. The reasons why Christiana Care is offering these packages early is to save money. And so although they are crediting extra money to your pension, which is good, is helpful, is nice, they will be saving money by not having to pay you a salary, not having to pay your benefits, not having to pay your health insurance. And certainly you can continue your health insurance through COBRA, but now that is going to be at your cost instead of at their cost. So it's very important to understand your cash flow planning, your income, your sources of income, your expenses, having a very good handle on what your expenses are, both anticipated as well as the always unexpected or surprise expenses. And then there's so many planning opportunities as it pertains to taxes. If my income is higher while I'm working and lower once I retire, are there tax planning strategies that we should take advantage of? Perhaps this year, while you still have that higher earnings, maybe you do charitable giving if you're inclined, maybe not just for this year, but perhaps for multiple years through a concept called bunching. Maybe you use a donor advised fund or some other strategy so that you get the tax benefit this year, but can allow your charitable giving to be sprinkled out over several years going forward. Next year, when you're in a lower bracket, perhaps you want to take a look at doing Roth conversions or other things to take advantage of being in the lower bracket. So a lot of implications to that. And then, as Bill mentioned, Social Security. There are studies that have been done on Social Security. The most common time to claim Social Security is age 62. And the reason is because that's the earliest you can. But is that the right thing to do? Is that the right answer? For every year before your FRA, for retirement age, for every year early you claim, it's a permanent 6% penalty on your Social Security income. And for every year past your FRA that you wait, it's a permanent 8% increase in your Social Security benefit. For those who are married, this is a decision that impacts not just you, but also your spouse, because the higher of the two Social Security benefits is payable for the life of the survivor. So at the death of the first spouse, the smaller of the two benefits is lost, and the larger of the two benefits continue. So again, this decision of should I retire, should I take a joint and survivor if I'm married and as required by law, or should I talk to my spouse about waiving their rights to the joint and survivor and maybe rolling the proceeds out in a lump sum to an IRA rollover account? These one-time irrevocable decisions that you are likely only faced with once in your life have massive, massive implications. And to be clear, this objective is not to scare anybody or put the fear of God in anybody. It's just a matter of fact. These are huge decisions with huge implications, not to be made lightly, and you want to understand how these decisions impact other areas of your life. So income and cash flow planning, tax planning, Social Security strategies, Medicare strategies, and Bill, thanks for touching also on some of the non-financial implications. For example, what do I do once I retire? Maybe I volunteer, maybe I get a second career, maybe I set up an LLC and do some consulting for a period of time. Where's my sense of purpose come from, once I don't have to show up and go to work every day? So fascinating considerations, fascinating things to be thinking of, big implications. And again, if you are married, these decisions, of course, don't impact just you, but they impact your spouse, and I'll even go so far as to say future generations as well. So no small decisions here. These are significant decisions. Well, we appreciate so much that you've joined us this afternoon. If you have questions, please feel free to email them to Michelle, that's Michelle spelled with 2 L's, at covenantwealthstrategies.com. You can also call our office, area code 302-234-5655. The building on the screen, if you are watching visibly, is actually the old stone barn in Limestone Hills. That's where our office is located. We've been in this location now for about 16 years or so. And so we're centrally located just a few miles away from the Christiana Care hospital. We would absolutely welcome the opportunity to answer your questions, to assist you in any way that we can. And as Bill mentioned, we do not charge for initial consultation or conversation. So please feel free to reach out to us without worry, and we'll see if we can answer 2 questions. Number 1, do we think we can help? Number 2, do you want our help? If the answers to both those questions are yes, then we'll give you the opportunity to engage us, and we'll move forward to help you make an informed and educated decision as it pertains to this specific situation. and then walk with you through life and help you with other decisions as well. So with all that being said, Bill, again, thank you for your presentation. Great job. It's been our pleasure to present this information to you. We pray that it has been helpful and informative, and we welcome you to give us a call and to chat with us about your own personal circumstance. Thanks again.